Alright, hey everyone, this is Scott here again with a brand new video to help you learn how to trade, invest, and master your finances so you can apply that knowledge in the real world and multiply your money. And of course, with today being Friday, as always, I have another episode here of my live option trading series. And so the primary theme for this past week in the market was, for me at least, a lot of trading defense. So that's going to be the focus of all the various clips that I'll be showing you in this video. So in particular, you're going to see some more experimental kind of adjustments I made with my JD position, also my Docusign position. And then also throughout this video, you're going to see some technical analysis on both the NASDAQ and also the S&P 500. So that way you can see where my thought process is with the market here in the short term. Now, as always, before we dive in here, in case you are brand new to the channel, I just want to let you know that you can also find me on SKILLSHARE as well, where you can take my very in-depth classes on options trading or stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out. And when you sign up for SKILLSHARE using any of those links, you'll get a full 1-month free trial. Okay, and so briefly here before I show you some of the clips that I recorded throughout this week, just to give you a brief overview as to what happened in the market this week. Obviously, if we come to the charts real quick here, and I'm showing you QQQ, this is a NASDAQ ETF, so I'll zoom in a bit. So this was another very volatile week in the stock market. Initially, we saw equities continue a huge rally that they started last Friday. But as you'll see in this video, I did note that equities were probably rising too quickly and by too much, and they were reaching some pretty significant resistance points. And so that's why for the second half of this week, and partially due to an abysmal earnings announcement for Facebook, now we are seeing equities undoing all their huge gains from earlier this week. And so ultimately here, I'm still pretty bearish on the market as a whole right now. I have not seen at least any reason to think by looking at the charts here that we are going to revisit all-time highs anytime soon. And so with that said, again, just wanted to show you here a brief overview as to what happened in the market this week. So now at this point, I'm going to stop here and play a few clips that I recorded throughout the week that will show you those various adjustments I made in some of my positions, and then also a lot more analysis with the charts here. So let's get started. All right, today's Monday, January 31st, the final day of the month, and today we finally saw that big market rally that I've been expecting to see after all the selling pressure that we've been witnessing for the past couple weeks. So looking at the chart up here, what I'm showing you is QQQ. This is an ETF that tracks the NASDAQ, so let's go ahead and zoom in a little bit. And so again, today in particular, right here, this was finally the big push higher that I've been waiting to see. Although I will say I was definitely very wrong with the timing of this big bounce here. And that's because specifically exactly 1 week ago, last Monday, this was when the stock market completely fell apart and stocks came crashing down. And then in the same exact day, everything reversed and actually finished up on the day. So basically, I took that as an indication that perhaps for the very short term at least, the selling has come to an end. But of course, as you can see here, I was definitely wrong with the timing there. Right, for a couple of days, stocks were selling back off and kind of bouncing back and forth a little bit. But finally, specifically on last Friday, the previous trading session, we finally got a more sustained rally at the end of the day, which again continued all of today. And the reason why I was expecting to see a pretty big rally at some point in the near future is because regardless of where stocks are going, either up or down, they're not going to go to their destination in one straight line. Right? Typically along the way, you're going to see a lot of back and forth. And so in particular with this past month, we've seen pretty much nothing but selling. Right? For almost the entire month of January, stocks have been moving lower almost every single day in a row. And so again, at some point, I was expecting to see the bulls to finally wake up and enter the market and start buying everything up again to potentially save this market. But that being said, I'm still not convinced here that we are going to continue this rally and perhaps push all the way back to all-time highs again. Personally, I do believe we are now in a more different environment in 2022 with the likelihood of increasing interest rates and obviously with inflation getting a bit out of control. And now with stocks coming down in a huge way and basically breaking the trend that we've been seeing for the better part of 2 years, I would not be surprised, and I've said this many times in the past, I would not be surprised if we saw a more long-term correction in the market. And I do think at this point, or somewhere around this point, the market is going to start hitting some pretty significant resistance points. Number one, here in yellow, this is the 200 period moving average, and this definitely can act as either support or resistance, just depending on which side stocks are on for the time being. So the NASDAQ here is definitely going to have to fight to get past its own 200 period moving average. Then there's also the 20 period moving average here in blue. And then most notably, you have all this overhead supply here. So perhaps around this point at the lower end of this range, right around $380 per share, I would not be surprised if the NASDAQ had a hard time getting above that price, or at least QQQ here. And so actually, let's go ahead and draw in that resistance point. So we'll go to the drawing tools and go right around here. And then I'll draw in a line right around 380 bucks per share. So just like that. So I will definitely keep a close eye on this resistance level for the time being. I would say that if the NASDAQ can get above it, then perhaps it's game on for higher prices and more all-time highs. But if we see the Qs here get repelled off this point, if they can even manage to get up here, then perhaps we might see stocks come back down again and perhaps make even lower lows. And in my personal opinion, I do think the chance of stocks actually reversing at some point pretty soon and perhaps making even lower lows, I think that is a more likely outcome. So that's why I played a lot of defense today with my positions. So first off, coming over to my Docusign position, let's take a look at the charts on that, DOCU. And so, of course, with the entire market being up huge today, Docusign was definitely not left out of that. So this stock was up pretty big today as well by over 7%. And this stock has now cut through my short call strike. So now, if we come over to the trade tab here, for this trade, I'm short the 119 strike call option. And also, I was short the 115 strike put option. But I did actually take that one off today, and I'll explain why in a second here. But again, as I was saying, with my 119 strike call option, you can now see just how far in the money it is right now. Right, so with Docusign finishing today at 125.77, it's almost a full $7 above my call strike. So the first thing I did to defend this trade was to buy 100 shares of the stock once it crossed my call strike. And so in that way, because I'm now long 100 shares, I have converted this initially naked call option into a covered call option. And as a result, it does not matter how much higher Docusign goes at this point. Now also, once Docusign got to about 122 bucks per share today, it was at that point where I bought back and closed my 115 strike put option. So I bought this contract back for a debit of about 370 bucks, I believe. And the reason why I did this is because this is currently my worst position that I have on right now. Right, this trade here definitely did not start out as such a narrow short strangle at the 115 strike put and the 119 strike call. Originally, this position started out as a 115 strike put option and also a 160 strike call option. So point being is I have had to roll down this call option many times to take in additional premium because I've already lost a fair amount of money on this position from having to use the stock as a hedge to cover either one of my contracts. Right, so specifically with this put option, which I had on, there were many times where Docusign fell below 115, so I had to short the stock to cover my put option, and then Docusign bounced back above it, which therefore forced me to buy those shares back for a small loss, although sometimes those losses were much bigger than I expected. So point being, the total amount of those kinds of losses have begun to add up significantly for this trade here. And so that's why I'm basically in emergency mode by trying to find different ways to take in additional premium. So the point here is if Docusign simply never falls back down below my call strike, right? If the stock stays above 119 all the way through to the February expiration date in 18 days, then I will definitely lose a little bit of money on this trade here, probably around 800 bucks or so. And I'm actually totally fine with that in that kind of situation. Right, again, with this being my worst trade of the year so far, if I end up losing about 800 bucks or so, I am okay with that situation because that loss is still pretty manageable and I can make that back with a few winning trades. That being said, like I was saying earlier, I'm not convinced that stocks are just going to keep on moving higher and higher and higher from this point forward. I definitely would not be surprised if at some point in the near future, stocks came back down again. And if that happens, then the price of these put options are going to increase a lot more. Number one, because stocks will have moved lower. And then number two, typically when stocks do move lower, you will see an increase in implied volatility. So again, both those things will increase the prices of these put options here. So therefore, if Docusign falls down to, let's say, 119 again, at that point, I might be able to sell one of these put options, perhaps the 115 again, for a much higher credit than the debit I paid to buy it back today. So for example, because I bought this put option back today for a debit of about 370 bucks, but if I have the chance to resell this put option somewhere down the road for perhaps 500 or 600 bucks in premium, then the combined effect here is I will basically take in a net additional credit for the entire position while still keeping my position basically the same. 115 strike put option, 119 strike call option. Of course, I also could have rolled in my put option a little bit more, perhaps all the way to a straddle, but that's honestly a very last resort kind of adjustment, and I don't want to use that one quite yet. Moreover, if I did decide to instead just roll in this put option all the way to the 119 strike, Then looking at the difference in prices between these two options, the additional premium would only be about $150 or so. And that is definitely not a lot of additional premium for a last resort adjustment. So like I said, if Docusign simply never comes back down between now and the expiration date, then I'm okay taking the loss on this position. But if it does come back down, then I want to take advantage of selling some options that are not quite at the same strike as my call for a lot of additional premium. And then if that scenario plays out, and then after that, I decide I want to roll this put option into a straddle, well, the total additional premium will be a lot more than if I just did it now. So that's Docusign. And then also I made the exact same kind of adjustment here with my JD positions. So take a look at JD real quick. As you can see here, I am short the 72 strike call option, which is now in the money. So I'm also long 200 shares of stock because I'm short 2 of these contracts. And then I was short 2 of these 67.5 strike put options. But just like with Docusign, I bought these contracts back today. So again, same thing here. This is also not one of my better positions. And so if JD simply never comes back down to revisit my 72 call strike, then fine. By the expiration date, I'm fine taking the loss on this trade here. But if it does come back down, then again, the price of these put options will increase once more, and I will resell perhaps the exact same put options for a much higher credit. So basically, this is a way to avoid having to continually roll in your options again and again and again, all the way until you get to a short straddle, which, as I said, is a last resort kind of adjustment. And then also one more update I want to give you in this clip here. Let's come back to the charts very briefly and go take a look at my Airbnb position, or I should say former position. So again, because the market was up huge today, Airbnb was definitely not left out of that either. So this stock finished up by almost 8% today, and I did have a short put option on at the 136 strike. And at the time I made the trade, I did note this potentially significant support level, which you can see here in red. And this one goes all the way back a few months, as you can see right here, and also here and here and here. So my assumption was perhaps that if Airbnb got down to a price of around $140 again, it might bounce off it. Now that being said, as you can see here with this candle, Airbnb did get down all the way to a low of around $134 per share. So this stock definitely got caught in all the crazy selling that happened last week, and that's what forced it to kind of make a crazy move down to $134 per share. But fortunately that did not last long, and Airbnb zipped right back higher. And so it was basically at the very end of the day, pretty much right around this point, where I bought back to close my put option and booked a pretty small profit. And the reason why it was not a full profit had to do with the fact that once Airbnb did get down to 134 and it breached my put strike at 136, at that point I did have to short 100 shares of the stock, and it did bounce through my put strike 2 times. So point being is I had to short the stock and then buy it back for a small loss both times. And those losses were basically the reason why, again, I did not make a full profit that I was expecting to make with this trade here. But still, given that all my other positions are not in great shape right now because of all the crazy volatility and selling that we've been seeing in the market, I will definitely take my profits no matter how small that they may be right now. So those are my updates for today in this clip here, and I will see you in the next one. Okay, today is Tuesday, February 1st, and just one thing I did in the market today, and that was I placed a brand new trade once again in Airbnb here. So if you've seen my previous live trading videos, then I'm sure you've noticed I've been trading this stock quite frequently, and that's because it's one of the few stocks I can find right now that still has very high implied volatility, but does not have an earnings announcement in the February expiration cycle. Right, so basically, unless I'm trying to specifically play an earnings announcement, then I do try to avoid those events. And so now taking a look at the chart here, let's go ahead and zoom in a little bit. So with my previous trades on the stock, I was selling put options because I did notice that Airbnb got down to what I saw as a pretty significant support level, right around $140 per share. Although, as I explained in the previous clip, because Airbnb did get caught up in all the crazy selling this past week, that's probably why it broke down below the support level and fell all the way down to about 134. But obviously, as you can see here, it shot right back up. And so now that we've seen 3 huge up days in a row, I do think perhaps at this point, Airbnb has reached a significant resistance level. So that's what I drew here in red, just below all this overhead supply. And then also in blue here, this is the 20-period moving average. And as you can see in the past, Airbnb has definitely had a hard time getting above the 20-period moving average. So we'll see what happens here. I do think this is a very pivotal moment, not just for this stock, but stocks in general right now. Right, as I explained earlier, I was at some point expecting to see a very large rally, and now that we've seen that for 3 days in a row, that's why I'm starting to nibble here on the short side. And it's also not just with Airbnb here. For example, if we come back to the NASDAQ or QQQ, same kind of thing here. Let's zoom in. I do think at this point, this ETF is approaching some pretty significant resistance. 200 period moving average alongside the 20 period moving average. And then of course, don't forget this very large overhead supply at around 380 bucks per share. And we can see a very similar thing also with the S&P 500. So now let's come over here and take a look at SPY, and we'll zoom in here on the chart. So same kind of thing, also approaching the 20 period moving average. And then also, let's go to my drawing tools and go to the trend line one here. And I'll draw in that same resistance point that you saw on the NASDAQ. So again, there's a lot of overhead supplied right around here, exactly 453 bucks per share or so. So again, like I said, I do think now is a very pivotal moment. If stocks can break above all these resistance points, then we might see more all-time highs pretty darn soon. But if stocks start to fail around this point and start to return back down lower, then we might see even lower lows. That would certainly be very interesting to see. So that is just the way I currently see the market. But obviously, we'll just have to wait and see what happens here. My guess is maybe come tomorrow, we'll get our answer as to which way stocks are going to go. But point being, I think right now is the best moment to put on bearish positions if you are like myself and you do think stocks are going to go back lower from here. And so that's why finally coming back to Airbnb one more time to show you what exactly I did here. And then we'll go to the trade tab. So for this trade, very simple. I just sold a naked call option at the 162.5 strike. And usually when I sell naked call options, I'm pretty cautious when I do so because, of course, generally speaking, stocks do climb higher over time. So that's why I did want to give myself a lot of cushion here, directionally speaking, in case I'm wrong. So even though, like I showed you on the charts here, I do think Airbnb is going to run into trouble right around now, perhaps somewhere between 158 and 160 bucks per share. But again, just to be on the extra safe side, that's why I sold the 162.5 strike. And then of course, if I am super wrong on this trade and Airbnb continues to climb higher, and if it crosses my call strike here, then at that point, I'll buy 100 shares of the stock and cover my call option. So that hopefully in that case, if Airbnb continues to go higher after that, then I still have the chance to make a profit by the February expiration date in only 17 days. So that's the update for today, and I'll see you in the next one. All right, today is Thursday, February 3rd, and as I was kind of expecting to see, given that stocks have begun to approach, as the way I see it, some pretty significant resistance points, today we finally saw a very massive sell-off across the entire market. So once again here with the charts, as I've shown you before, this is QQQ, an ETF that tracks the NASDAQ. We'll zoom in here a bit. And so there we go. Today in particular, the NASDAQ was down the most by just over 4%. And again, if you recall from the previous clip, I did note the 200 period moving average here in yellow and also the 20 period moving average in blue as pretty significant resistance points. And then also in a similar fashion, if we come over to SPY and take a look at that chart, pretty much the same exact thing here with the S&P 500. So SPY tried to break above these various resistance points, and then ultimately today it failed in a big way. And it seems the main culprit behind this huge sell-off in the market today was actually the Facebook earnings announcement, which happened yesterday after the market closed. So now, if we come over to the Facebook charts real quick, just want to show you this. So Facebook is down by 85 bucks today, which is a drop of just over 26%. And so, of course, because Facebook is a massive company and it's in all the major market indexes, so when a company of this scale drops in a huge way, that's typically going to bring the entire market down along with it. And I'm definitely very grateful I did not play the earnings announcement here for Facebook, because had I done so, I probably would have sold a strangle of some sort. And clearly on the put side, that would have gotten totally blown out. And then also today, I did take advantage of this big down move by making adjustments to my JD position and also my Docusign position. So if you recall, and let's actually go back to Docusign real quick and I can show you what's going on there. And we'll go back to the trade tab. So if you recall from one of my previous clips here, as stocks were climbing a lot higher earlier this week, Docusign obviously got up to a very high price, somewhere around 125 or 126 bucks per share. And then I explained while that was happening, I bought back to close my 115 strike put option because, again, I was hopefully expecting to see stocks come back down to earth a little bit. And therefore, if that happened, which thankfully it did, I could resell this exact same put option again for more in credit than the debit I paid to buy it back. And so that is exactly what I did here. I believe it was on Tuesday where I actually bought this contract back for a debit of about 370 bucks. And today I sold it again for a credit of 430. So the difference there is 60 bucks. So that's an additional credit for this whole position of $60. And again, that's for selling the exact same put option all over again. And then also I did the exact same thing with my JD position. So let's take a look at JD. So same kind of scenario. JD was moving a lot higher. I bought back the 67.5 strike put options for a small debit. And then today, once JD came back down in a big way, I actually sold the 69 strike put options. And so even though this is pretty similar to just rolling up my put option contracts, right, from the 67.5s to the 69s, but by basically legging into this adjustment by buying back these contracts after JD had skyrocketed a little bit, and then waiting for JD to come back down and then selling the 69 strike put options, the additional credit I collected would have been a lot more than simply rolling up the put options in the same exact day. So those were the two adjustments I made today. And then lastly here, I want to show you the charts for my Airbnb trades, so ABNB, and in a very similar fashion with the NASDAQ and the S&Ps as a whole. Again, for this stock, it does look like it is bouncing off or getting repelled off its major resistance points that I noted in the previous clip. And so I would love to see this stock come all the way back down to perhaps this major support level around 140, because that would probably be a very good point to take off this trade for a profit, whatever it may be, in the case where my GTC closing order has not gotten triggered yet. And so those are the updates for today, and I'll see you in the next one. Okay, welcome back. I hope you enjoyed those few clips there. And so now finally, just a few more updates to give you in this video. So number one here, coming back to the charts, taking a look at where the NASDAQ is today. So initially we saw a much higher open, and actually yesterday after the market closed, we saw a huge push higher. And that was all thanks to the Amazon earnings announcement. So actually, let's take a look at AMZN real quick. And there we go. As you can see here, Amazon is up by over 300 bucks today. That's a 12% move higher. So they did blow out their earnings expectations. And so like I mentioned, that was the reason why after hours, once these figures came out, the NASDAQ in particular had a huge surge higher. But it seems like today, coming back to the NASDAQ, a lot of those gains are now being undone. Right? So again, here, the NASDAQ is only up by about 0.14%. And that's definitely not a good sign. As we have seen in the past, typically when huge companies like Amazon or Google, Apple, Facebook, etc. have good earnings announcements, we oftentimes see the entire market rally off of that event. But of course, as you saw previously in this video, Facebook had a terrible earnings announcement, and same thing with Netflix a few weeks ago, Spotify as well, and many others. So it definitely seems here so far that the good news with Amazon is not enough to prop up this market. And also one more thing on the charts here. Let's go back to my drawing tools real quick and go back to the trend line. I'm also going to draw in a support level right around here, right around 352-ish bucks per share. So I'll draw it over like so. And there we go. As you can see in the recent past, this price point here definitely acted as a very good support level. And then over here, once the market sold off in a huge way, it was for a brief time acting as resistance. As you can see, there were multiple days where QQQ tried to get above that price, but it failed until finally it succeeded. But now, with equities coming back down again, it seems that it's taking a pause again, right around that now support level once more. So this range right here is definitely going to be very important going forward. If the Qs can break above this point up here, above 380 bucks per share, then at that point, like I've said earlier, we might see more all-time highs again. But if the Qs break down below 350 bucks per share or so, we might see even lower lows. So definitely a very interesting market here. We are no longer seeing the very simple and boring grind higher every single day like we have been seeing for the past 2 years. Now we're seeing a lot of chop, back and forth price action, and a whole lot of selling. So it's certainly a very pivotal moment for stocks in general right now. And I would say that if equities do continue to slide today and break down below the support level that I drew in here, then I would not be surprised if come next week, things get a whole lot more interesting, and specifically for the bears. And then finally here, one last update to give you, and it's a bit of bad news. So coming back to my JD position or former position, unfortunately for this one here this morning, I simply took it off and cut my losses. So keep in mind for this position, I had on the 72 strike call option and also the 69 strike put options right around there. And unfortunately this morning, this stock simply got away from me. I was trying to, of course, buy the stock once it opened above my call strike, but it just moved too quickly. and buy too much for me to be able to step in and buy the stock at a good price. So at that point, I just said, screw it, especially given that this position has already given me a very hard time anyways. And so just cut my losses and I'll try again on a new position, probably come next week. And so with that being said, that's going to do it for this video. I hope you enjoyed it, and please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading or stock market investing, then check out my SKILLSHARE courses. Links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.